Forget everything you thought you knew about why the markets move. Seriously. Today, we're going to pull back the curtain and learn the market's secret language so we can follow the real giants, the whales, that actually steer the financial seas. Let's jump right in.
All right, welcome to AI Explains ICT. In this video, we're digging into a really critical concept from the Core Content Month 3, Episode 2. We're talking about institutional order flow. And trust me, once you get this, you will never look at a chart the same way again. So let's just start with a huge question, one that pretty much challenges everything you've probably been taught. Why do markets really move? What's the actual engine pushing price from one point to another? Well, here's a little secret. It has almost nothing to do with this classic chart patterns like head and shoulders or triangles. From the ICT perspective, the real reason is way more, well, primal. It's all about a hunt. So let's go behind the scenes and take a look at what's really going on. Let's talk about the market's hidden engine. Okay, so this engine has a name, institutional order flow. And all it really is the process where the big players, we're talking large financial institutions, the big banks, the huge funds, are actively hunting for pools of orders. We call these pools liquidity, and they need this liquidity to fill their own gigantic positions without messing up the price on themselves. You know, you can think of it like this. The market isn't just some random chaotic place. It's more like a playground that's been specifically engineered for these whales to find what they need, which is liquidity. Price itself is just an algorithm, and its only job is to move to where the money is resting. Now, this slide is so important because it shows the night and day difference in mindset. The retail view, right, that's all about finding support and resistance, trading chart patterns. But the institutional view, it's a completely different game. They don't see support. They see a big pool of sell-stop liquidity sitting right below old lows. They don't see resistance. They see buy-stop liquidity just waiting above old highs. They're trading the order flow, and to them, candle wicks are basically just noise from the little guys. And this chart right here just perfectly shows that difference. A retail trader looks at this and sees support, right? A floor. But an institution, they see a target. They know that just below those lows is a giant pool of sell-stop orders. And those are orders from traders who are long and trying to protect themselves. So to fill a massive buy order, the institutions will actually push the price down into that pool, trigger all those sell orders, and just absorb them. That's their liquidity. So the big question is, how do we start reading this institutional story for ourselves? Well, let's decode the clues that they leave behind for us. The very first key is to separate the signal from the noise. And in this way of thinking, candle wicks, they're mostly noise. It's retail activity, it's broker spreads. The candle bodies, now that's where the real story is. That's where the institutional volume shows up. The bodies tell the true story, and that is where you need to focus your analysis. And this leads us to one of the most powerful concepts out there, the order block. It sounds complicated, but it's actually super simple. An order block is just the last opposing candle right before a big, strong price move. So a bearish order block is the last up candle before a huge move down, and a bullish one, it's the last down candle before a huge move up. This is their footprint. It's the exact spot where institutions showed you what they were doing. Okay, so now we know how to spot these institutional footprints, these order blocks. But how do we actually use them? Well, the key is to put them into a simple, top-down, multi-timeframe blueprint. And the process is actually pretty straightforward. It's a top-down analysis. First, we start on the monthly chart to get the really long-term, big-picture story. Then, we zoom into the weekly to see how that story is playing out. And finally, we use the daily chart to pinpoint our entries with some real precision, based on what the higher timeframes have already told us. Let's see how this actually works. Here's a monthly chart. Now, we're not drawing support and resistance here. We are mapping institutional intent. The blue zones, those show a bullish order flow, where the market is trying to get to liquidity above old highs. And in those red bearish zones, the goal is to hunt liquidity below old lows. This becomes our long-term strategic map. So then we drop down to the weekly chart, and we can see the story in a bit more detail. Those monthly zones are still in charge. They still define our bias. So if we're in a big red bearish zone, we are only looking for reasons to go short. If we're in a blue bullish zone, we're on the hunt for longs. The weekly chart just confirms this directional flow. And then finally, we get to the daily chart. This is where it all comes together. With our bias set from the higher time frames, we're not guessing anymore. We're just waiting for the price to react to these key levels with precision. For example, we might see the price come back to a bullish order block that's inside a larger bullish zone, and bam, that gives us a really high probability trade entry.
When you start to adopt this approach, it really does require a complete shift in how you see things. It's a whole new trading paradigm. And if there's one thing you take away from this video, let it be this. The market is not random. It's not a chaotic mess. It's a highly efficient, purpose-built machine. And its only purpose is to reprice to levels where that large-scale institutional liquidity is sitting. It's basically just a delivery algorithm for money.
When you truly understand this mechanism, you stop just reacting to price and you start anticipating it. And as ICT himself says, you'll begin to see every significant price swing coming before they get there. You're not just reading a chart anymore. You're reading the roadmap. So that's our foundational look at institutional order flow. If this shift in thinking was helpful for you, if a light bulb went on, do me a favor and show some support by liking this video and subscribing for more breakdowns like this one. And hey, if you have questions, drop them in the comments below. A real human will get back to you.
So the next time you look at a chart, don't just ask, what is the price doing? Instead, ask, where is the liquidity and who is hunting it? Thanks for watching. Safe trading.